We are continuing the chapter, moving on to the last portion of this chapter, that is overdraft balance as per passbook, and you will have to think from cash book point of view. Okay, just the reverse of what we did under section 3. So think from cash book point of view, since it is overdraft balance. If it is just balance as per passbook, you have to do as a normal question, just like a passbook question you have to do. When it is overdraft balance, or we can call it as unfavorable balance, or when will passbook have an unfavorable balance? When it is having a debit balance. Understood? For a passbook, usual situation will be like a favorable situation means a credit balance. So you can give the heading as debit balance as per passbook, that means unfavorable, or unfavorable balance or overdraft balance as per passbook. Okay, so this thing you have to remember. For cash book, favorable means debit. For passbook, favorable means credit balance. So now we will work out illustration number 20. The question starts like this. Passbook of Sri Rajendra shows a debit of 10,000. Debit balance for a passbook means it is unfavorable or overdraft, and you will have to think from cash book point of view. Okay. The first item given there is checks amounting to 8,000 drawn on 25th March, of which check of rupees 5,000 were encashed on 2nd April. The date you have to note down. We are doing for the month of March, but out of 8,000, 5,000 worth check were encashed only in April. So which is this situation here? This is checks issued, not yet presented for payment. Understood? This is check issued, checks drawn means check is issued. Okay. So checks issued, not yet presented for payment, and we are thinking from cash book point of view. So this item must be added. But how much will you add? Are you going to add 3,000? Normally you will do 3,000. That's wrong. Here it is mentioned 5,000 were encashed only on 2nd April. So we are doing in the month of March. In the month of March, that 5,000 rupees is not presented. Okay. So what we have to add now is that amount of 5,000. So we will work out that question now. Illustration number 20. Write column headings. Then we are starting here with debit balance as per passbook. The amount is 10,000. First item to be added, that is check issued, not yet presented. Amount, write very carefully. It is 5,000 that was not presented. It was presented but only in April. Okay, the next one, checks paid into bank means deposited. The amount is 5,000, but check of 2,200 could only be collected in March. So the situation is checks deposited, not collected. And what should we do if we are doing with cash book balance? This is an item to be deducted. But how much will you deduct? What is the amount not yet collected? You have collected 2,200 in March itself. So not yet collected means 5,000 minus 2,200. What you have to deduct now is 2,800. You have to read the sentence very carefully. So leave some space here and then you write less check deposited not collected. Actually, when you draw, your particulars column should be big enough. Amount columns need to be very small just to write the figures. So the amount here we have to write is 2,800. Yes. The difference 5,000 minus 2,200. That's how we got this figure. 2,800 be deducted. Then bank charges 25. Bank charges 25. So what will happen to passbook? Passbook will go down. We are making changes to cash book in this section. So cash book also we have to less by 25. So here itself we will write that is bank charges 25. Okay, then the next one, dividend of 350 on investments collected by the bank. So it is something which the bank is getting. So the bank account will increase or the passbook will increase. So cash book also we will have to add. So the amount is 350. Interest on investments collected. 350 you add. Then bill of rupees. Okay, that final transaction is new for you. Bill of rupees 10,000 was retired by the bank. Retired means paid by the bank under a rebate. Rebate means a discount of 150. So bank has paid only how much? Did they pay entire 10,000? No. They got a discount and they paid only 10,000 minus 150. That means they paid only 9,850. So in the bank passbook they have deducted how much? 9,850. But the full amount was credited in the bank column of cash book. I have told you before, crediting the cash book means the reverse meaning or the opposite meaning. Crediting the bank account means adding your bank account, isn't it? Crediting means the amount has been added to your account. Whereas crediting the cash book means cash book is or the cash is moving out, because cash book credit side means the payment side. So it shows the payments actually. So crediting the cash book means it is going down. Okay. So we have deducted how much in the cash book? We have deducted the full amount. Here we deducted only 9,850. In the cash book we have deducted entire 10,000. You understood? So this is the situation. Passbook we deducted only 9,850 and cash book we have deducted entire 10,000. So how will you make these two equal? And you are making changes only to cash book balance. So cash book now we have to add how much? Entire 10,000 we deducted. So to make these two equal, will you less something? No, we have to bring this up. We have to increase cash book. How much will you add? You have to add that 150, because 10,000 and 9,850, the difference is 150, that we will add now in cash book. Okay, so add that 150. What you can write is, the entire sentence itself you write, that is bill was retired, bill was retired means paid. Bill was retired and retired by bank you write. Retired means you can write there in your textbook, that's a paid amount. And full amount credited in. Crediting the cash book means deducted. So now we are adding that 150. Okay. So now you can just find the totals. It is 500, the total of added items, and the less item total is 2825. So final answer is 12,675, that you can write as overdraft balance as per. Okay, overdraft balance, or you can write like this. The first what we wrote is debit balance as per passbook. So the opposite you can write now, credit balance as per cash book, or you can write overdraft balance as per cash book also. Okay, 12,675. Okay, the amount we have already written. So that is fourth section. We'll do illustration number 23 also. That's easy, almost all transactions are repetitive there. Okay, we'll just go through the question. It's BRS on 31st March 2019. We are starting with bank overdraft as per passbook. So you will have to think from cash book point of view. Okay, the first item, check issued not yet presented. Thinking from cash book point of view, this item must be added. So add that 8,750. So we will do that. This is illustration number 23. You give the headings, bank reconciliation statement as on 31st March 2019. Then the column headings, everything you must write. Then you can write overdraft, that is the credit balance, debit balance for a passbook. Overdraft balance as per passbook. Sometimes they will not mention as overdraft. They will simply mention, like in previous question, like debit balance as per passbook. Then you must understand, for a passbook, debit balance means it is unfavorable or overdraft. Okay, so here bank overdraft, the amount is 16,500. Then check issued not yet presented, we have to add check issued not yet presented, the amount is 8,750. Then the second one is check deposited but not collected. So that's an item to be deducted. Amount is 10,500. You leave enough space here. We have altogether 9 transactions, so enough space you need to leave there on add item. Then you write less check deposited not collected. The amount is 10,500. Write within brackets. Then the next one, checks recorded in cash book but not sent to the bank for collections. Okay, checks recorded in the cash book means we would have added to the cash book, but it's not sent to the bank, so there is no change in the passbook. So what should we do? We can make changes only to cash book balance. So bring it down. So less 2,000. Checks recorded in cash book but not sent to bank. The amount is 2,000. Next one, payments received from customers directly by the bank. So it's received by the bank, passbook will increase. Cash book, what should we do? Add it. So add the 3,500 in cash book now. Direct payments by, not by bank, this is by customers which we are getting. Okay, direct payments by customers, 3,500. If you write direct payments by bank, that means cash is going down. That meaning is different. Here you must write direct payments by customers. Bank charge is debited in the passbook. Debiting the passbook means passbook is going down. Cash book also we have to less. So less 200. Bank charges less 200. Next one, premium on life policy of Gokul paid by bank on standing advice. He is the owner of our firm, and as per standing instruction, bank is making payment, so passbook will go down. So cash book also we have to less, that is 1980. You write life insurance premium paid by bank. $1,980. Then next one, bill for rupees 3,000 discounted with the bank for rupees 2,850 in February, dishonored, and noting charges paid by the bank. Amount is 100. The noting charges is 100. The bill amount is 3,000. Now I will explain one term, that is bill discounting. It's a new term for you. Please listen carefully and understand this concept. Bill discounting means, suppose on 15th of September we sold some goods on credit. You know what is the meaning of credit basis. for rupees 3000. Okay. You sold goods on credit basis. That means, will you get the amount on 15th September? No. You will be getting only on a later date. The agreement was like on 30th September, the customer would make the payment of rupees 3000. So, on 15th September, customer gave us, that means customer gave a bill to the firm. Okay, the customer is giving a bill to the firm on this date of sale. We are not getting amount of 3000 but a bill saying that the amount will be paid on 30th of September. But during this period, in between 15th September and 30th September, suppose on 20th September, firm needs this amount. Firm is in need of this amount of 3000. 3000 is just example. So, firm is in need of this amount. But can the firm go and ask the customer to pay 3000? No, because the agreed date is on 30th September. He will make the payment only on 30th September. So, what we can do in this situation is, you can take this bill. You means the firm is having the bill no, of 3000. That bill you can take, the firm can take, and you can present this bill to the bank. Okay. All these happening on 20th of September. When you are in need of money, you took the bill to the bank. And bank will give us not full amount of 3000. Like in this example, I will take the same figure. The bank gave you an amount of 2850. Okay, the bank gave you an amount of 2850. This is called bill discounting. When you sell goods on credit, that means immediately you are not getting the amount. Instead of that, you will get a bill of that 3000 and payment will be made by the customer only on a later date, only on 30th September. In between, on 20th September, if you are in need of money, you have a facility like bill discounting. You can take this bill to the bank and bank will give us not full amount, but they will deduct their bank charges, their commission they will take. After that, here 150 they have deducted as bank charges. After that 2850 we are getting. We are suffering a kind of loss because entire 3000 we are not getting. But before the maturity date means the date of payment is 30th September. Much before that, on 20th September we got the amount. Okay. This facility offered by the bank is called bill discounting. So, you just have to understand this example, okay, to get the meaning of bill discounting. Now, what happened in this question is, a bill was discounted with the bank for rupees 2,850, but the actual amount is 3,000. Okay, now on 30th September, who will make the payment to the bank? The customer will directly make the payment to the bank. How much they will pay? Entire 3,000 they will have to pay. Okay, bank paid us only 2,850, but now when the customer is making the payment on 30th September, entire 3,000 the customer will pay to the bank. Suppose the customer doesn't make the payment. Customer, if he fails to make the payment, who is having the liability? The firm is having the liability, because firm is the middleman between the customer and the bank, and we got the amount from the bank. So, in case if he doesn't make the payment, again it is the liability of the firm to pay that amount of 3,000. Okay. Now, in this question what happened is, a bill of 3,000 discounted with the bank. Discounted and dishonored both are different. Discounted with the bank for 2,850. What happened is, it was dishonored. Why it got dishonored? Because there is no balance in customer's account. That means customer couldn't make the payment because there is no balance in his bank account. So, the bank returned this bill just like they returned the check. They returned this check or bill, that is called dishonoring of bill, and that amount is 3,000. So, though I explained all these, what you need in this question is bill dishonored. If it is bill dishonored, what will happen to the bank passbook? It will go down. So, cash book also we have to less. Understood? So, you will less this 3,000. I just explained the meaning of bill discounting with that. So, you write here bill dishonored, that is 3,000. Then next is, it's not over, the same transaction we have one more amount, that is knotting charges paid by the bank rupees 100. Knotting charges means, see now in this transaction a dishonor took place, okay, because there is no sufficient balance in customer's account. So, the bank returned the bill. So, dishonoring of bill has taken place. For recording this, there is an official or officer called notary public who will record this or who will enter this dishonor, okay, because this is a proof. This is a proof that why the bank has returned the check. So, to record or to enter this dishonoring, the notary public will be given a charge or will be given an amount or commission, that is called knotting charges. Notary public means that is an officer. He will be entrusted with the task of entering this dishonor. So, he will come and check whether all these are correct or not, whether there is no balance in customer's account, all these he will be checking. Then he will enter this dishonor fact. So, for that he will be given a commission, that is called knotting charges, and it is paid by whom in the question? It is paid by the bank. So, passbook will go down, cash book also we have to less now by 100 rupees. So, we can write here knotting charges paid by bank $100. In your textbook they have added these two because these two form part of one transaction and they have deducted altogether 3,100. You can write like that or write it separately. Then last one, bank debited. What do you mean by debiting the bank account? Going down. Car loan installment of 15,700 including interest. So, again interest need not be added because it is included in that 15,700, not recorded in cash book. So, it has been debited in passbook or deducted in passbook, no change or not recorded in cash book. So, we have to less now that amount of 15,700. Since they have included interest in this, again you don't have to add interest. Okay, you find the answers and all. Finally what we can write is overdraft balance as per cash book. Yes. So with that, question is over. Chapter is also over. All 4 sections we discussed, that is debit balance as per cash book, or it is the favorable balance, then credit balance as per passbook, that's a favorable balance for a passbook, then 2 unfavorable situations also we discussed. This is what you have to learn. Everywhere the transactions are almost repetitive in nature. Then format also, you just have to study one format, then you are just doing the reverse for other sections. Okay, but it is little bit confusing, so you have to go through the sentences very carefully. The transactions you have to read 2-3 times before you write in BRS. Okay, before you arrive at a decision whether to add it or deduct, you read the transactions 2-3 times. With that, chapter is over. Then there is one more section in the chapter, like preparation of BRS with adjusted cash book balance, but they have deleted that portion, so you just have to study these 4 sections.